Ever had a situation where you looked at your profit and loss and you thought, oh, this looks way too much. I'm sure my sales are not that. This happens a lot. And how do we find out what are the errors that could have caused this to happen? If you are using your accounting software, what we've seen sometimes has happened, they will come here and say, for example, you received $2,000 from a client. Instead of finding the invoice this relates to, so they can allocate the payment, what they do is they ignore that, create a customer name right there, and then they allocate it to the sales account. Now, this is dangerous because you possibly already have an invoice to that name. So that is one of the biggest mistakes we have seen. If you think that has happened, there's a way to double check this. If you go to your accounting and go to the reports, then you click on account transaction. If you're tracking your sales only through the invoices that you've created, so let's just say you never ever receive any income that is not invoiced, right? Like any normal business. So there's a way to check how can we make sure that you haven't duplicated yourself. Now see here where the source is receivable invoice and credit note. So if there was a duplication, it would also have source as receive money, which would have come through the bank feed. So if you ever feel that your sales are overstated, always go to the account transaction report, pick up the account, look at the period and look at the sources, whether, it's only coming through invoices or they're coming through spend money as well.